Good morning. Today is Wednesday, April the 5th. Time right now in Singapore is 11:29 in the morning. We are 31 minutes to noon, and overnight on Wall Street, we have a bit of a marginal high in equity markets, but it couldn't hold on to its gain. And by the end of closing, there was a bit of a dip. In the Dow Jones itself, we can see the marginal high 33,634.7, following the entire series of rally. Now, I think the market is taking a breather, and in the short term, I think the market may extend lower. But let's take a look at the 1 hour time frame. If the market have a simple three-wave rebound, a pullback, that means to say that it possibly can hold at 33,000 even. Okay, but if the market take a deeper corrective action, then maybe the market can test the 50% of this entire rise here. Okay, this rise here is from the low here of 31,800 to 33,735. So the 50% mark is somewhere around 32,720. So do watch out for the possibility of the market either holding at 33,000 or 32,700. But however, if the market decays below 31,905, that should give us a little bit of a warning that perhaps the top is in, because over the mid to long term, I still don't believe the equity market has enough to power to a new high, because lately we've been hearing a lot of disturbing news. One, banks are limiting withdrawals. Now, two, we heard that Blackstone, not BlackRock, Blackstone, which is very big in the commercial property side, now is limiting withdrawal for those who actually participate in their B REITs. Okay, so these are disturbing news, because if the banks are limiting withdrawal and now fund managers are also limiting withdrawals, that means to say that something is not right here. So that will be not it will not be a good fundamental to continue to be long equity market, in my opinion. Okay, so let's take another look. Okay, and in the S&P 500, we also saw a marginal high overnight at 3,133, and this market is actually very, very close to my ideal selling price, which is going to be somewhere around. Hang on. This is irritating. Okay, my area of interest will be somewhere around 4,040, 4,140 to 4,195. So you can see this is a equality move, very, very neat, and the market is nearing this ideal price of 4,140. Although the high traded is 4,133, it is close enough. If you believe this is the peak, then of course from here onwards it's all downhill, right? So for the time being, we cannot say so because there is no convincing evidence to suggest that. But if the markets do a simple withdrawal, a simple pullback, then the 50% mark from the 3,900 to the 4,130 levels could actually see prices pulling back to 4,020 levels. Okay, so this will be the midpoint between the two extreme points. But if the market continues to go down below 4,000 and hits below 3,009, that should be the first inkling that something is not right and the top could possibly be in. Okay, so do watch out for all these levels here. Over in the Nikkei the Nasdaq 100, we also see that the price has a marginal high at 13,204. Again, we are beginning to see some kind of pullback, but again, if it's just a simple corrective action, then it should be shallow. However, if the market goes below 12,400, that will be the first sign that something is not right here. So be very, very aware of the various key points as you continue to hold on to buy position. I, for one, has not been in the market in equity index for quite some time. Okay, over in Asia, we can see that Nikkei has high yesterday at 28,282, and this morning the market opens with a gap down and has been trading progressively lower. The current price right now is just below 28,000 and 27,891. So this could continue to go lower. The crucial point here between these two extreme points, the market actually rallied from 26,630 and all the way to 28,280. So the midpoint will be somewhere around 27,450 levels. So if the market pulls back and can hold at 27,450, that means that there's a little bit more upside to go. But again, prices earlier on last week has actually traded into my ideal selling price at 28,500. So you can see that the high traded 28,734. Okay, so that's basically put it inside the bracket, and the market do come down from here. So there is a risk that the market may actually top out and continue to slide below the below 26,630. Okay, so we have to watch out for all these levels here. Over in the Hang Seng, we can see that the market rebound from 18,829. We have a very neat three-way structure. It short of my ideal price at 20,800. The high traded was 20,722, and it has been coming down since. And this looks a bit corrective right now, and it could go down all the way to cover this gap that we see here, and that will mean that the market may actually decay all the way to just under 20,000 to 19,775. So do watch out for this possibility of pullback here. Over in the mainland equity index, it continues to power higher. We have a three-wave rally from 3,935 going up all the way to this morning high of 4,103. So this is a very neat rebound, three-wave rebound, and this is my selling area. And we will have to see whether the market will power higher beyond 4,113. We will have to watch, but I think this is an area of interest. Selling interest may actually re-emerge from here. Okay, over in the energy market, we can see that crude oil prices have a marginal high compared to Monday's high at $81.75 per barrel, and there is this possibility the market pulls back in a corrective manner down into this bracket of prices at $77.45. I have already placed order to buy in this bracket of prices between $75 to $77.50. So I am very bullish on energy markets, especially crude oil and natural gas. So I've really gone long on both. So if you want to consider doing the same thing, this will be the good price, an area of interest. Okay, you can also consider to do the same thing here. Okay. Now, gold has a very explosive move, as I was mentioning over the last over the weekend, that this triangle pattern has finally burst up to the upside. We can see yesterday market in a spot gold market went up to a high of $2,025, and this is very, very aggressive. And this morning we since the market has slowed down a little bit, there's a possibility market may pull back a little bit, and the bare minimum pullback is usually about 23.6% from where it started at 1,949. So if the market managed to pull back at 2007, somewhere around there, that could be all that it can do. I have already placed order to add to my long position at $1,000.60. I'm at $1,960. I've actually gone long around there, and I'm prepared to buy. And this is probably the in my career, this is the highest price I ever bought gold if this 2007 is actually done. And my target for time being is about $20,060, $2,060. Although the potential for the market to go to a high of $20,069 is there, but I'm prepared to take profit at $2,060. I think that will be enough for me, and I'll just watch, because the reversal will be equally sharp. So if you have not placed your profit taking level, if you have really gone long, do so immediately, because the characteristic of a post triangle thrust is that it will explode to the upside, and it will also retrace just as fast. Okay, just be very careful here. Over in the silver market, the market did not manage to pull back. In fact, it has a marginal high. As we were speaking, market went up to a marginal high of $25, and let me see, $25.14. So very, very, very little shallow pullback. At most, if it ever does, is this leg over here, which is about $23.09. Okay, and $23.90. So basically very, very shallow pullback. In fact, there is none so far, so maybe it will not pull back at all. Okay, so this is how bullish the market has been. Over in the dollar continues to slide. Of course, one of the conditions for gold to rally is that dollar comes off, and we have seen that in the market overnight. Dollar index continue to slide. Now it's hovering just above 101, and unfortunately I am long the dollar itself. So right now I'm losing money on my dollar position, and not sure how far it will continue to go. I think the market may hold at 100.7 levels. Okay, so this will be my target for market to continue to edge lower, and that also ties in pretty well with the target, because yesterday gold high was $2,025. If the market can go up another maybe $40 or so, that will bring dollar index to somewhere around these levels. Okay, then I want to see how the market performs. Maybe that is when the dollar also reverse. So we will have to see the correlation here. Okay. And of course, if the dollar continue to go lower, the other major currencies continue to go higher. Okay, and this is unfortunate because I'm also short the sterling. Sterling have a marginal high at 1.2525 before it goes into a consolidation. If the market pulls back here at 124.30, I will prepare to actually buy back my short position because this is somewhere near where I actually went short. Okay, so that will not be a major loss to me. I will just take my minor loss and get out of the market because right now I'm on the opposite side of this dollar move. Okay, over in the dollar euro dollar itself, I think the same thing is happening. Euro dollar has a marginal high at 1.0973, and now it's going into a bit of a consolidation. The market pulls back to 109. I will also square off one of my short position, the one that I just took last week, and this one will end up not losing money. I will just possibly scratch the trade, and for the other one, I'll probably find a way to mitigate that. I think the upside potential may still be available because the dollar has not bottomed out yet. Okay, over in the Aussie, I think the Aussie market, after the major rally on Monday, may continue to edge higher, but I think the top side is also quite limited here. I am thinking somewhere 0.6820 to 0.6870 the market will top up. So this is not that far away. If the market goes up, then possibly it will present a selling opportunity. For those who want to sell this, just be aware that the downside potential is all the way back to the March low of 0.6565. Okay, so there is about maybe 200 points here if you want to go for it. Okay, so 300 points here if you want to go for it. So maybe it's still worth it because this is a three-way corrective rally, and if the market can actually go into this bracket of prices, that will present a very decent selling opportunity. Okay, over in dollar yen, the dollar continued to slide, but before the market went down, I was telling the whole world that perhaps the market can actually do a rebound. I managed to sell somewhere around the 133 half levels, so I actually managed to get into a good position to sell the dollar yen, and the price has gone down. And then today, the low so far is 101, 131.30, and if we get a bit of a rebound back to about 132.20 to 132.50 levels, I am prepared to add to my sell position because I think 129.65 may not hold. It may actually go down all the way and actually target 125 half. Okay, 125 half is actually my ultimate termination target here. So I think there's a lot of potential here for the market to actually go down. If I can sell, add on to my position at 132.20, I think there is another 300 pips to go before the market finds a bottom. So this could be a trade that you may also be interested. Just saying. Okay, and in dollar CAC, I have no position. Dollar obviously is coming down, so the dollar CAC cannot rebound. So you can see the low traded in dollar CAC is 134 even, or sorry, 134.06, and the market may do a rebound back to 135. And if this 135 is an area of interest, then maybe you can also consider selling, but knowing that the bottom is somewhere around 132.75. So depending on where you think this is going to be worth your risk, if you think it's so, then maybe this is a good trade setup for you on the condition that a selling signal actually appears within this bracket of prices between 135 even to 135.60. Okay, over in the Bitcoin itself, market continues to go sideways. There is no incentive, but the rally from 19,569 continue to underpin this market. So the fact the market did not come down in any big way means there is a lot of demand underpinning this Bitcoin here. So ideally, we want to see a three-way pullback from 29,380 all the way to about $26,330, and then that will be the ideal setup because this will be equality, and from here the market can propel higher, but that will be the best outcome. But right now we do not know. There's a possibility market may go into a marginal high before it could give us a new pattern altogether. In the meantime, this is all I have for you. Just be careful because I think the equity market is getting seriously toppish. And yesterday I picked to talk to you about the spot gold and talking about the potential for an explosive move to the upside, and it actually happened the way I thought it would happen. And yesterday we have a high of $2,025 per ounce, and it's not over yet. My target is somewhere around $2,060 to $2,069. That is for gold. Now today I'm going to share with you a a new product. We talk about the currency today. We are talking about dollar versus the yen, and we have been seeing dollar has been declining since March, and in fact we have a high in the dollar yen just under 138 which was last achieved on March the 8th, and it has progressively been going down all the way to 129.65. Okay, on March the 24th. Then after that we have a bit of a rebound to 133.75, and market has come down since to 130 overnight, and this give me the impression that the market may continue to trade lower below 129.65 and may actually extend all the way to 125 half. I've actually gone long on the rebound here at 133 half, and prices now is down at 131.30. And in the afternoon, if we get a bit of a rebound during the London session, which is very likely to somewhere around the 132.20 to 132 half levels, I'm prepared to add on to my short position, because I think 129.65 may not even hold. Market may actually decline all the way down to 125 half over the medium term. So this is my sharing with you today. I hope it will pan out. Okay, let's see what happens. And in the meantime, take care and be safe. Bye-bye.